Good morning, everybody. Okay, just about 9 o'clock. I'm going to give it another couple of minutes. Let the folks that are moving slowly roll in, and then we shall start. Anita says structural based on context and price action based on candlestick patterns. Nice try. Thank you for playing, but that is incorrect. Anyone else want to take a stab at it? You're not far off, Anita, but it's simpler than that. So let's get started. Simple is always good, but it's really hard to get to simple. You know, it's funny. Stephen Jobs used to say that all the time, and that was the mantra of the iPhone and a bunch of other stuff they did there. And I actually worked fairly closely with Apple at the Mac launch back in '82, and yada yada yada. And uh, the wisdom of that notion didn't strike me fully until many years later. It really didn't. Excuse me, guys. I'm going to be gone for 30 seconds more, and then we're going to get started. I'd be curious to see if any. Oh, let's see. Jonathan did take a stab. Let's see what he said. Structural based on footprint, volume profile, edges, unfinished business, etc. Price action being tape activity. You're getting closer to. And part of what's you're missing is just semantic, but you're on the right track. I'll be back in 1 second. Okay, guys, sorry about that. I am back. It's funny that the days that usually I expect nothing to happen and is when stuff always happens. Isn't that life? Got a lot of sleep last night, which for me is really unusual with my physical stuff. I mean, like when I say a lot, like 11 hours. And so today I thought it was just going to be kind of quiet and low key, and stuff's happening everywhere. So, with respect to that, let's go back to both are order flow, but one is more spontaneous. That's an interesting way to put it. Both are order flow, but one is more spontaneous. Okay. Steven says price action based on immediate action of buyers and sellers versus what has happened in the profile past. Not entirely wrong, but not entirely correct either. Bill G, structural, historical, price action now. Not exactly either, although there's an element of truth in that. All right, great tries though. You guys are on the right track, and that's the key point. Okay, so today this is session 4, and I think one of the really nice things about doing a topic like this over multiple sessions is that you guys get to kind of absorb along the way, and at different paces, different students always do that, but the pieces start to fit together. So if you were at Lee's session yesterday, he and I had a chance to do a lot of kind of back and forth as we were watching the action. And that is really the crux of what I'm asking in this question, as well as the answer to that question. Structural trade setups are ones that are based on the overall structure of the auction, with the idea that the day has periods. Okay, so period A, period B, and so this is really core market profile stuff That's what the structural trade setups are. So for example, if I throw up, get this over here, if I throw up a footprint chart, and mine tend to be a little faster, but just for fun, let's use a 30, because that's the classic one to use against market profile, right? Because the periods, A, B, C, etc. And this is what we were doing yesterday. So what we are looking at here from the overnight point of view, which is everything to the left of the blue lines, and then to the right is once we got open here at 6:30. That was the first session. That was A, B, etc. And this is market structure. So, for example, that's the first hour high and that's the first hour low, or the initial balance, same thing. That is a way of describing the structure of the market. So those of you that said it happened in the past, that's kind of right, but it isn't. It's the past from the point of view that it was a half an hour ago or an hour ago, but it's really about today. Okay, so when we think of structure, we're talking about today, and the pre-market is part of today. Okay, so it's basically looking at this entire viewpoint as an auction structure. So the price moved based on the events that happened during the auction, and this is what the result of that was. Okay, so that is a structural approach to the market, and what Amy just said is pretty close. Price action is order flow dependent. David said structure using order flow. Price action strictly candlestick. Oh, first of all, there's one thing we just need to immediately eliminate here. It's because it's a really good educational training exercise. Okay, you guys are frequently confusing tools and what the market structure is. For example, price action and market structure have to do with no tools whatsoever. So saying that it's based on candlesticks, no, because candlesticks are just another model. It's another way of looking at price action within a framework of candles, okay? And pick any way of doing that, and what you're doing is you're getting farther and farther away from the price action. So I don't care if it's, if it's candlestick patterns, or it's range charts, or it's Renkos, or whatever it is, you are somehow taking the price action and compressing it into some model. By model, I mean, a way of looking at it. And there's a million different ways of looking at it. But the point is that those are representations of the price action. And the structural viewpoint could be looked at as a summary of the price action. Okay, so let's back up to some of the other comments, because a couple of these ones that you guys just made are interesting. Price action, Daniel says price action is the market response to the structure. That's a very interesting way to look at it. I posted, I'm not saying it's right or wrong yet, and the beauty of good complicated subjects is that there really isn't right or wrong. There's layers of right and wrong. And so, for example, is Anita's statement that price action is based on candlestick patterns, is that right or wrong? Well, that's actually wrong, but it's not. It's wrong because candlesticks summarize price action. So again, there's two issues with all this stuff. One of them is language, and trying to name these things, and we're going to simplify that a lot in a minute. And the other one is the farther away you get from the thing that's actually happening, the more complicated it gets. Okay, so right before class started, I threw this up, and so this is a 45-second candlestick. Excuse me, footprint chart. Okay, and I wanted to show you some examples. I'm going to actually put up the real live chart, but I wanted to point that out to you, that that was where I got that. It's this one right here that I always run next to my domes. And just pick a price point, like right here, okay? So let's just scroll back to there. This blue line is the first hour high from that day. And look at what happened here. And there's so many examples, but this is an interesting one. Price was above it. It was up at the green line, which is the previous day high, okay, or the overnight high, depending on what day and what time it is, but the most recent significant high, look at it that way, usually the previous day, previous regular session. So that's my green line, that's my blue line, and look what happened. Forget this area right here for a second and concentrate on this. It drifted down to what we know is an inflection point. And we don't know that because we're furus. We know that because we have decades of evidence that the initial balance, the first hour high and low, from a structural, there's that word, from a structural point of view, if you just look at those points every day, they are significant. So structurally, they are significant, but you can't trade structure. You need price action to trade it. So what happened here was we drifted down, and then just, you know, we and this happens a lot. We head faked through it a little bit, and then just what's your overwhelming viewpoint of what happened here? It can't be anything but it reversed. It was going down. All of these at the bottom are the bar by bar deltas, and then that changed right here. We got positive, and then we got more positive, and then price went the other direction, and that's what happens when buyers come into the market. That's how price changes direction. That's the most simple element of trading. So sometimes it takes a little time to collect. In this case, you know, each one of these is only 45 seconds. So that was 145 seconds, and that's the one it reversed on. And then it went up pretty strongly. And guess what? Look at the place where it turned again, right here. That, remember, the green line is the previous day high, and it had already been a really aggressive inflection point. It got sold really hard here, okay, and then we drifted down. Then the first hour high got bought, and then we came right back to that point. I mean, it to the tick. And if you look at the first hour high and low channel, it's stunning how frequently that happens. So, and this is just one example. You could look at any time of the day and find as many of these as you want around those areas. So, so this is a really good, whoops, this happens here with, hang on, I'm asking it for data it doesn't have, and and it's going and trying. Jeff, I'm trying, hang on, okay. Now, this is exactly the mistake I made before when I asked it for too much data. Hang on one second, let me just disconnect my price feed here, and it will catch up with me. Okay, we'll let that settle down, and while it does, I'm going to bring up something else to talk about. So let's go back to this picture here. So this is the 5-minute view, and whenever we're looking at footprint charts, that's kind of a clue to think structural. Now, I'm not saying that a footprint chart is the only way to see market structure. It's just one of the easier ways to see it. And not necessarily only on 30 minutes, but, you know, I like 5 because it's more in tune with my trading style. But, you know, let's look at 15 just for fun. Let's grab the middle. And just by looking at this, okay, this is a 15-minute footprint chart. Look at the regular trading hours. That's market structure. All right, first hour low, first hour high. This pink line right here is the opening 5B, the high of the opening 5. Again, see how that was an inflection area. The market gets there and everybody starts trying to decide which way it's going to go. And the buyers and sellers argue for a while. And some floor traders used to call this swapping spit, where we would get around an inflection point. It would just move back and forth for a while. And if you saw that on the floor, you know, it's a real good way to trade the range. So structure of a market can often give you clues as to what price action you might want to look for. And this is a good example of it here. We left this inflection point pretty aggressively. And guess what? What was the first place where we settled down and started to do the same thing again? Right. I mean, to the tick. Again, that will happen over and over and over at the first hour high. So the reason I'm doing this introduction now and talking about this price versus structure is it's a really important element to understand. Structure in and of itself is not a setup, but understanding that those structural points act as inflection points, that is what you're looking for the price action setups. So it's kind of like the structural setup gives you an idea where to look, and then the price action gives you an idea of what events can cause you to take trades going which direction. So that's kind of the actual meat and bones of it. All right, I'm gonna pause on this for a second. I am gonna go over and get questions if there are any over there. And then we're gonna kind of go through the setups, and that's gonna be the crux of today. So, God, why is this one here? Let's just repaint it. This one is just hung. Golly gee, you know what? There we go. I'm just gonna restart Ninja. It'll save me some time. Okay, and no, we don't want to do that or that. Okay, so let me look over to the questions and see where we're at. Interesting comment. I'm gonna go all the way back to where I left off. So, okay, so Joey had said order flow, but one is more spontaneous, being price action. We talked about that a little bit. Price action based on immediate, this is Stephen, action of buyers and sellers versus what has happened in the past. Okay, so now if you take what he said with reflection of what I just said, that makes some sense. The structure isn't necessarily the past, it's just kind of the overview. It's both the past and the present. It's the big picture. So let's see, Bill said structural, historical, price action now. Again, these are all right, but it's shades of right. Structural based on technical analysis from Amy. That's actually not right at all. So Amy wins that one. Let's see. Let me just look through the rest of them. Yeah, there's a couple of good addendums to this idea. Jonathan saying a structural setup is based on first hour, high and low, open 5. Exactly. So again, let's stay with the notion that the structural ideas are kind of the big picture of the price action at any given moment. It's not that it's really past or present or future. It's just if you step back and you look at, let's restart Ninja here so it gets ready for us when we need it. If you look at the overall structure of the day, and that gives you kind of the 10,000 foot view or the big picture. And then when you get to structurally important places, and if you look at Lee's approach to the market, that's a good way to describe it. There are structurally important places that he looks for opportunities at. And I do very much the same thing, but I tend to let the price action lead me there. And then if those are also structurally important, I just add emphasis to it. Because I tend to let the price lead me. And again, that's just really a style difference. It's not that we're looking for different things or at different things. It's just that the way we're interacting with them is a little different. Okay, so Ninja's back up here. We'll get price, or excuse me, data running, and we'll be good. Okay, so okay, good question. So I'm just reading through the, David asked me, what would I use in very, very low volatility? That's a great question. I'm not sure you understand how good a question you're asking. Let's put that back into the way we kind of were talking about the last two sessions. What would I do if I were you and I was relatively new? And number one, and number two, what would I do when conditions return to relatively normal, which they will do. And they're starting to do it now. You know, we're still in these pretty big ranges and we're still getting price discovery. But we're not seeing the total craziness we saw a couple of weeks ago. I think, you know, that'll be typical. We'll stabilize for a while and then something will break us out of that stability. So going back to your question there, David, let's look at it. You're asking, what you're saying is right. Price action under quote unquote normal conditions gives you the earliest clues to what is happening at a structural inflection point. Okay? Does that make sense, everybody, what I just said? So you're all on the right track. You just need to kind of put it in the right words for your language and your understanding. Let's see, can a first hour high or first hour low be treated as an IP before being formed? Yes, as a matter of fact, it can. And if you recall Friday and last weekend, I brought that up. I've decided to, in my approach, even if the first hour high isn't necessarily the first hour high yet, because we haven't gotten there, I changed my indicator painting to have it start painting right away. I used to have it paint at the end of the first hour high. And the reason is, if you get an idea of where they're forming, even before they form, that can often be useful, particularly in the first 5 minutes to the first half an hour. So, you know, that's really more about the opening 5A transition to the first hour high. And that's what this means. Some of you were perceptive enough to notice that I had changed the language of my open 5B, and I integrated it with the first hour high setup, and I put a little arrow on there, and the idea of that, in fact, I should use that arrow there instead of that fake arrow, so that's a good idea. While I'm talking about it, I'm just going to go do that. I had gone, somebody said, what is that? And oh, that's a bad attempt at making an arrow from a dash. And then I went out and got a real arrow. I think it was Barr that had said that. So that's what we're really meaning there. Okay, so that was a really, really astute observation that I've changed that, and it was correct. I have. And the reason I have is for this question right here, that oftentimes the transition to oh, I did it again, damn it. I keep doing that. Instead of scrolling, I'm compressing, and I don't mean to be doing that. It's just that Zoom, the world of Zoom causes that. It's really hard to navigate in any high res as a presenter with Zoom. Okay, but here's a really good example of what I'm trying to show you. So this was the open right here, okay, at 6:30. And then remember, the pink is the open 5. And the open 5 was, you know, basically you know, one of these wiggle battles on this particular day where it really didn't show any sort of direction. It just battled really aggressively in the first 5 minutes. But the idea that this could be the first hour low right here, it was important, and that's how I started treating this. So that's why I'm having it paint that, even though the first hour didn't end till right here. It was nice to know that, you know, barring some unforeseen circumstance, that was going to be where it was. And likewise, this was 7:20 right here. We painted the first hour high and we didn't look back for a while, but the first hour didn't end till right here. So absolutely, those of you that noticed that, it's a really good way also to explain this idea we're talking about of the transition, you know, from price action, which we're seeing within the bars, to structural action, which is, you know, how is that representing itself with respect to market structure and the market profile and the A period and the B period. So, you know, another way to look at it is I'm kind of getting real, you know, zoomed in on the price action within any of the periods. That would be an accurate additional way of looking at it. So let's go back here again. So now what I did is I made this 3 minutes so we could go in and look at the open, you know, real fast. So here, you know, here's the open 5, right? And it actually, that's 5 minutes. So it actually was painted officially right there. And then we broke below it. So this is price action I'm watching within the structure of the open 5 and where I'm thinking that the first hour low might hold, which, you know, these two bars turned out to be it, right? But, you know, we were only at 640 at that point. So that was a great observation, great question. And yes, I wanted to emphasize it. All right, I'm going to go back to the questions and comments, and then I'm going to start going through the setups. One of the dangers of me answering a lot of questions is we get off of what we meant to do the session itself, which right now is go through the setups. So I'm not going to spend too much more time on this, but I really wanted you guys to understand this distinction. Jonathan, great. Structure is the score, price action is the notes. Perfect. That's exactly right. For those of you that understand music, that's exactly right. Bill G. I might challenge the notion structures are a reflection of price action. Yeah, you could say that. It depends on how fast you're looking at the price action. Remember, I don't look at price action trade from one trade to the other. I look at it as an aggregation of the tape around an inflection point. So for me, it's everything. It's the movement up, the movement down, you know, the bids, the offers, the stacking, the pulling, you know, the blocks. I'm looking at all that stuff. So it really depends on your skill and how granular you're getting. Yeah, what Michael Glass said, structural is the where and price action is the when. Yeah, or the how at the when would be another way to say it. Okay. Yeah, remember all my charts are 6:30 Pacific time, so I'm 3 hours ahead of New York. Let's see, Dimitri, for those of you in construction, this is interesting. Structure is the frame of the house. Once it's in place, it's done. Ooh, and this is really, and then you can decorate around your house. That's brilliant, and that's absolutely correct. These are all so good. You guys are getting it. You're getting it. So Bar asked me, structural setups can occur around 5-minute high and low and first hour high and low, but the price action setups are more like, what you're doing is you're using the price action to give you a better understanding of what's happening at the IP. Zoom screws up my colors, guys. They may look white to you. My pink lines might look white, and that just Zoom doesn't render the colors very well. Okay, good stuff from everybody. Let's jump out of all that and let's actually go through my stuff, the playbook, and so really important notion though to understand the difference between structure and price action. And again, this is one of those I finally got a real night's sleep epiphanies this morning as I was reading the comments and the questions. I thought, this is really the crux of the distinction right here. So let's look at examples of ways to describe that. And I think that was a really good exercise to do. So good job, everybody. Yes, David. I think you've got it pretty close to right. Remember, right is a little bit subjective for everybody because, the simplest example of that is there's at least a dozen people here translating at high speed, because I talk fast, what I'm saying to another language. We have a lot of non-native English speakers, and boy, I respect for all of you because I am weak in about a half a dozen other languages, and I couldn't even think about going to a webinar and listening in Mandarin. I can follow some Mandarin if I'm in the room and watching the speakers, but forget it. So I really have a lot of respect for those of you that can do that. Okay, cool. So if you've been following along, I took the old process that we started this with, and it was the one, and again, just so I'm clear here on what I'm talking about, it was this one, and it had some extra setups that I have since removed. I removed spring and up thrust. It's not because it's not a good one or it doesn't happen. It's because it's more complicated to do right. So it doesn't mean it's not there. We're just not going to talk about it. Same thing with the range play, the pure ebb and flow range play. Okay. So and the flip, because the flip, if you see it and you understand how to trade it, you can take advantage of it, but it's really not a setup per se, because it can happen over such a long period. And it can be over 30, 40 price points, not ticks, but actual handles in the ES as well on a big overnight move. So again, that one's just hard. So Darren had made a suggestion, and it was a really good one. He said, why don't you just do a stripped down version that's really basic but really specific for the newbies and for the not so newbies, and then they can go back and look at the more complicated ones, and maybe we'll have an advanced session on that at some point. So I thought that was a great idea, and I adopted it. So this is the one we're using now for this class, and it really, even for me, this makes it much easier to be consistently profitable. Those other setups, again, I'm always thinking about the flip. That's a really good example. Anytime there's a big move up overnight, you should be thinking about a flip. But beyond that, it's really going to distract you from the good setups that might occur along the way. And so that's a really good example how it's a really great thing to trade. But as a newer person to this approach, or even as a not so new one like myself, it's really got to be almost like the internals, the advanced decline, it's almost got to be more like a filter in the back of your head. And that's a really hard thing for a new person to assimilate. So let's just get rid of it. And, you know, with enough said, right? Everyone, yeah, exactly what Amy said, go for the base hits. You know, you can always grow to the next level. Okay, so is this stripped down process posted in Slack? Yes, it is. Clay, it is. If you've been following, I always post what I do in the Masters channel, and Lee does sometimes as well, but most of his newer stuff, or his stuff like this, really pertains to Sierra charts, so you'll see his there. But basically anything to do with my process or playbook is always here. So this is called Simple version 2. That's it right there. And there's an Excel version of it as well there if you want to make your own. It's really important to follow along in the Slack, everybody, during the week, even if you can't, you know, spend days there. Just keep up with what's going on, because then you'll see, you know, the transitions from one thing to another like that, and you'll see the posts about them. So the idea of this simple version was nothing changed at the top, although I, you know, added some bold and some color just to organize it, and I'll come back to that in a second. But what changed is down here. I took out the time of day column and I integrated into the conditions. And then I organized the scalp trades all together and the wait mode trades all together. And then I put all of the relevant criteria for them, and I cleaned it up a little bit. So let's just go through this. And again, I'm just going to talk about the setups from here forward, and I'm going to do it one at a time. So we are now going to talk about the Open 5A. I'm not going to take questions on anything else. And if you don't get it, particularly if you're a newbie, bless your heart, but tough. You really need to just give yourself time to let some of this material get absorbed. And so I'm not, you know, the people that just telling me I still don't get it and go back and ask me questions from session 1 or 2, at this particular session, I'm simply not going to entertain those for the purposes of getting through everything. And that's all there is to that. Okay, so the Open 5A setup. We are going to do the following for every one of these. We're going to talk about the psychology of it. I mean, what's really happening. Then we're going to go look at a bunch of examples of it. And we're going to talk about how you do it. And that's it. There are tons of examples. Yes, Debbie just posted that there are. And I'm going to show a few of each of these. They have refined themselves a little bit. So you could very correctly say that I might have said something in October or in, you know, December in one of the workshop sessions, and I'm saying something that's slightly different now. Well, number one, progress always, never perfection. And number two, I'm on different platform. I'm using DayTrader. I'm using Ninja 8, not 7. You know, so your world will never be done, guys. It's constantly migrating. And that's why you need computer skills to do this well. You can't pay people to do that for you. You have to be able to at least work your platform and keep it current and migrate up to date. So that's an important lesson along the way. Okay, so the Open 5A is a very simple idea. The following is the idea. If you look at the overnight, and we're just going to talk about all of these from the context of the ES, but they apply, the Open 5 applies to any instrument that has a regular trading session. So it could be anything. Any index, for example, is worldwide, would have an Open 5A type of behavior. Some commodities do and some don't. The bigger ones all do for the same reasons I'm about to describe. So CL, gold, you know, all of the larger, heavier traded commodities are going to have an Open 5 type of behavior around either their old pit open or around the opening of regular sessions in that country. And, you know, gold doesn't have a country, oil doesn't have a country. So, you know, West Texas use the United States, you know, gold use the United States. It's just wherever the biggest fish are, that's all there is to it. Okay, so having said that, let's get back and just put it into context for the ES. On any given night, and this is the 3-minute of the ES, my sessions are slightly darker. You know, it's a slightly darker color, like this volume profile over here, that's a regular session. This one is an overnight. It's optimized for me with my color scheme. I've tried to make it work for Zoom the best I can. I get it's a little hard to see, but can you guys at least see the volume profile here for overnight and the one for regular session? Good. All right. I fooled with this yesterday for an hour and a half trying to make it work so that it wouldn't screw me up, and I think I got it. So I hope that'll be. All right. So look at the overnight last night, or Thursday night. This is a perfect example of a flip setup. Okay, but again, I don't want to get into that setup. Just keep it in the back of your mind. It's not uncommon. So you have something go on overnight, and overnights typically are very quiet unless there's news. You get a sharp, sudden move. All right, this was a overnight that was relatively quiet. At the end of it, for whatever reason that it came down, we drifted along, and then we opened. Okay, so this is the idea of the open 5. Anybody that is running a very large amount of money might trade overnight, but they won't do it with any size simply because they're too big a fish. If I want to push 1,000 lot out, I'm not going to do it when a 9K change in the wave volume moves the market from 31 to 41, okay? Because I'm just going to be too big a fish. It doesn't make any sense. Nobody that knows trading would be putting on large trades at night unless they had to. And sometimes that happens. You will often see that. It will cause a momentum event, and then we'll slow down and go back to ebb and flow. So the concept around the open 5A is very simple. Anybody that wants to trade size based on anything that's happened since the close has an opportunity to do it as soon as the volume picks up, and that's the open, okay? There is simply nothing else to the idea of this trade. It is both a structural trade and a price action trade. It's structural simply because of what I just said. It's the opening, it's period A, and the reason it's period A, and it's the most important thing that Stettlemaier ever came up with in the market profile, was because of what I just described. I mean, it's that simple. Overnight, if you're big, you can't trade, or you have to trade lighter, or if you're gonna trade light, you're gonna try to push the price around to your advantage, okay? That's all of the different ways that a large book trader would be involved overnight. Most of them don't trade at night overall at all. Many hedge funds are prohibited in their bylaws from trading overnight because the people that back them just don't want to get stuck in a limit situation or whatever it is. So understand everything I'm saying right now is not a matter of opinion. It is a matter of fact. And one of the problems I have with a lot of newbies is they want to come in and argue opinion about setups. And the fastest way to becoming a good trader as a newbie is to learn to distinguish fact from opinion. Everything I'm saying is fact, okay? How to play it and how to trade it is going to be my opinion. But everything I've said up until this point about the open 5A is fact, okay? Everybody clear what the setup is, why it occurs? It's volume coming into the market that's basically pricing in everything that happened overnight that they can't trade because of the volume. And now they can trade it, so it's going to get priced in, and it's going to get priced in really fast. Hence the opening 5 minutes. Okay, great. Thank you, Clay, for that feedback. I mean, it's such a simple concept, but gosh, in the workshop in the fall, I mean, I got asked the same questions and different versions of the same questions for months. And I still get them, and I get that, and I love it. And bless your hearts again, all of you. But it's not a complicated thing to understand. When the market opens, okay, you will see one of two types of price action. You'll see ebb and flow, price discovery. And that's the most common thing right at the beginning of the open 5. And what is price discovery? It's just simply when we're going back and forth and we're doing it really aggressively. So let's see, let's scroll back here on this one to the open on a 45-second footprint. We'll see some good examples of that. Oh, I know this is really a slow way to do it. And I hate scroll bars because they take up space and I don't want to see them. But when I'm teaching, obviously it makes more sense to use the damn scroll bar instead of the other way. So, all right. Here's the open 5 on a 45-second footprint. So we opened right there, okay? Remember I said there's typically a head fake? This was it right here. That was the up head fake. Why was it a head fake? Because nobody went along with it, okay? That's the definition of a head fake. As soon as we got to that point where, and what is that point again? And now I want to spread it out a little bit because I want to see that right there. Okay, buying. All right, and this is the delta right here for each of those bars, and I kind of mashed them together so you can see the color. And it pushed up, and you could have played that long. It wasn't aggressive enough in my view. So I was watching that, or I would have been watching that. Okay, and what is that? That was like 20 to 25. This is the opening 5 kind of move you want to play, where just out of nowhere you get aggression. And so, look at the delta right there. I know it's really hard to see, it's small, but that says 952. The next 45-second delta was 1600. It was more than a double, and it even kind of gapped away from that. So my point here is that the trick to trading this is to figure out who's winning and get on that side. And this particular day was not a good example of an open 5 trade. It was a really crappy open 5 setup. They usually are much better than that. So let's go back, and I'm going to use my 5-minute view here to find some good ones to show you. Just want to go get some more data. What do we got? 10 days here. Let's get 15 days. And give that a second. I'm going to go back to how to trade these two in a minute, but I really want you guys to understand each setup. And I'm going to spend less time on each one as we go, because it should make more sense with respect to price action as we move along. Like we can talk all day about the difference between the open 5 high and low and the first hour high and low, but the way you trade them is exactly the same. Structurally, they're very different. So I'm going to come back to that. So, again, to keep everybody on track here, it's 9:42. We're 40 minutes in. I'm shooting for an hour and a half here. So we have, like another 45, 50 minutes. And what I want to do is go through these quickly, what they are each. And I'm doing that right now for Open 5A, but a lot of it's going to be a repeat. So be mindful of that. Okay, so here we are. Oh, again, I need to turn on my scroll bars. It's funny, every time I do a Zoom session for you guys, I have to go back and then repair my workspace and put it back to what I want. All right, so here's a really, really good, oh, that was a better open first hour high. Let's find a good, there's a good one. Okay, let me just see when that happened. Perfect, okay. So this is a really good example, a better example, I should say, of how an open 5 typically works. And so this was the overnight, okay? And we just drifted up. This was one of the days I posted a flip because it clearly was one. And the second we opened, okay, remember this is 3 minutes now, and I'm going to stretch it out just a bit. So you could see the head fake move up, and look at the timestamp right here. That's 6:33 when it touched what became the top and the high of the open 5. And then look at the aggression it got sold with. And then once that low got established for the open 5, look at the aggression it got sold again, all the way down to what became the first hour low right there, okay? So do you guys see how that open 5, once it started going, it was really obvious. And even on a 1 minute, it'll be more obvious. But my point is, you don't trade it on a chart like that. I'm just using this as an example to see it. Let's go back to this one. It should be this one right here. No, it's not that. Or wait a minute. Whenever I transition times like this, it's really hard to stay on the same day. I think this is it, actually. Yeah. Okay. Nope. Sorry. Wrong day. Damn. Okay. This is it. Okay. Yes. All right. So. All right, so even on a 1 minute, you can still see the head fake, but this is why I strongly encourage you not to try to trade these off charts, except like 15 seconds or something like that. You can see the head fake move up, okay? We opened right here and we head faked up. See, it just didn't really get anywhere, and there wasn't a lot of energy. Look at the delta, and it was just like, trying to do something, and nothing, and then look what happened next, okay? Look at that delta bar right there, that's 634, Okay, this is a 1 minute bar, took us down to 34. The next 1 minute bar took us to 32. The next 1 minute bar, 30. The next 1 minute bar, am I making my point? 26, okay? So if you just hopped in, even if you hopped in late, all you had to do was get on board and you caught a really nice open 5 move. Okay, so let's put that aside for a second and let's look at the rest of the comments about the open 5, and then I'll pause very quickly for questions only on the open 5. All right, so you're looking for high momentum, preferably in one direction, but you need to be mindful that a head fake with price discovery is not only possible, it's typical. So, you don't want to have conviction right away. You want to really stay in the moment about what's happening. Number 2, obviously, remember I consolidated time of day and conditions. So this only occurs in regular trading hours, the first 5 minutes. There's no other conditions this applies to. So whatever market you're talking about, that's where you're going to look for it. If it doesn't happen, or if it isn't very clearly one-sided, like the example I was just showing you, then just sit on your hands and you do not have a trade. And what I do is I look for this trade on a 15-second chart. So I'm watching it right here. For those of you that are still in, kind of chart to dome thinking, this is where you will see it unfold. But obviously my domes would be up here and that's where I'm trading it. But the 15-second bars, the beauty of that for the open 5 is even if you miss the first one, or the second one, this trade tends to have some momentum. So as long as you get in with a market order, even if you hesitate a little bit, you'll be okay. And hesitating a little bit will keep you out of the head fake. So sit on your hands if it's not clearly one-sided. Always use market orders for this trade. I can't tell you how many times I thought I was smarter than myself and tried to use a limit order on what became a 20 or 30 handle opening 5 move. And Jeff the moron is sitting up there with a limit order 1 tick off the trade. I mean, I can't tell you how many times that happened. It's just not worth doing. It's just not. So market orders, no exceptions. The minute you're in your trade, the only thing you want to do is get a stop in between your entry and the current trade. And if that's a loser, you're on the wrong side. So this trade tells you right away if it's right or wrong. If it's not profitable right away, you're wrong. Get out, start over. It's that simple, okay? There's just, again, don't overthink this. There's just nothing else here, okay? If you're wrong, take a couple ticks loss. You can come in again 30 seconds or 15 seconds later. Just don't get in this trade with a bias. You cannot have bias. It will tell you the right direction. It will just go. Go with it or not. That's all there is to it. Okay, the only other element here that is important are high volume nodes. They will frequently give you clues about what's gonna happen. So for example, and it's really hard to see this without a dome. Let me think for a second where I can show you this. The chart we were just on, and again, if I can't show you something today, I will show it to you in the live session we have scheduled Thursday. That is Thursday, right? That we scheduled that. I put up another live session to go through more examples. I'm pretty sure it's Thursday. Yeah, Thursday, 6 a.m., putting it all together. Be there. Okay, so I don't know if I can show that to you on here. Let's see, I'm gonna try. Otherwise, I'm gonna punt that one. But what I'm trying to do is show you the high volume node idea. And I think there was a little bit of that. Yeah, okay, there was right here, but you're not gonna be able to see it on this time frame. Oh, let's see, I'm gonna give myself 4 more seconds to see if I can give you an example of this. And then if I can't, I'm gonna wait and show it to you live. So bear with me while I have a sip of my cold brew coffee here. And Ninja repopulates our chart. Okay, the problem with volume profiles is that obviously for the session, this volume profile filled in, this the session one much later. But okay, understand that this is actually a really good example. I can show you, if you don't get it, leave it till next Thursday. But assume that it was right now. Okay, this was where we were right now. So basically it's overnight and it's just about to go into the open. And this is what the volume profile looks like, okay? We have two high volume nodes, two real big ones, right? Double distribution. We got one up here and one down here. And then within that, there's a couple of little bigger ones. Like there's an HVN, there's one. So you get what I'm saying. They're just the places where there was more volume. And if you look at that same, so, that one's going to be in stone as soon as we open. So here we opened, and a good example of how that's useful would have been right here as we were heading up. We reinforced the idea that this volume, high volume node here was an area that everybody pretty much agreed was a good place to own. We didn't go through it to the downside. So if we would start to go up away from it, that would be the classic range trade thinking that, we're going to fill in the range and fill in this low volume area. And lo and behold, that's exactly what we started to do. So that's what I mean. And again, nothing more, okay? I say that jokingly, but I can't tell you how many people try to find more depth here. And there isn't any, okay? It's simple. Watch high volume nodes for inflection. I just showed you everything and all of what I'm talking about, and there's nothing else there. There's no other secret. There's no other magic indicator. There's no Larry Levin, magical pivot point. The open 5A trade is this entire thing and nothing else. There's nothing else to this trade. If you understand what I just showed you on a really, really skilled level, if you get good at what I just showed you and nothing else, absolutely nothing else, you can make a six-figure living trading just this trade with a 5 lot. I have a really good friend that has been doing it for 10 years. I used to call it the 2 and 2. It's the only trade of mine he does. It's the only trade he does, period. He trades the first half hour of the day, then he shuts off his computer, and he couldn't care less what happens the rest of the day. And he's been making a living doing this forever. I mean, he's the most disciplined guy I know, and he doesn't know anything else about the market and doesn't care to know anything else about the market. He saw me doing this a few years ago and said, cool, that's my bubba. I'm just going to do that. I'm going to make a living. And the rest of the time, I'm going to go surfing. And that is literally what he does. Have I made my point about this setup? Okay, now I will take questions on it very quickly, and then we will move on to HMOMO. Okay, I'm being asked privately, but it's a question that publicly I want to elaborate on. Somebody's asking me about Tradeovate and replay mode and Jigsaw does have a bridge to Tradeovate. And I'm just going to say this. I've said in a lot of recordings, I have very mixed feelings about Tradeovate, and I'm just going to say the following because it's important for everybody here. I love the concept, and I've been trying to make it work, and I've tested it over and over again for 2 years. I'm not testing it right now for the following reason. It doesn't work. When the markets get crazy is exactly when Tradeovate's cloud stuff fails and exactly when we can't afford to have it fail. So to save $2 a trade, I'm simply not interested. That said, yeah, replay, doing replay altogether is not something I want to do. It's useful for examples like this, but I don't want to download all the replay data and all that. And again, you really can't see the tape that way. You can see a replay of sort of the tape, but you can't see order flow. So yeah, that's all detail I want to get into about that. All right, back to the Open 5A. Questions really quickly. I'm scanning the list. Lee, please point out any I really missed. Oh, good. There's a good one here from Amy about an ATM. Amy, I'm going to give you an assignment. I would love to see ATM brought back up Thursday because I wrote 2 new ATMs just for this. I have 2 different ATMs for the Open 5 now. A fast scalp 1 lot, a fast scalp 2 lot, and then I have a range scalp 2 lot. So please bring that up. Okay. Jeff, considering the NQ is much thinner and more volatile, would I employ the same? No, Dimitri, great question. The same principles in the NQ. I have never found the Open 5 tradable in the NQ. The right answer to trade the Open 5, and simply because of the spreads. You know, the NQ, because it's tied to the stocks that are so heavily traded, there's so much arbitrage going on over there. The best way to trade the NQ is to trade extremes. You know, if you can get short a one lot at the extremes in NQ or long a one lot, you can make a fortune. But great question to ask me in my next live session when I can show you some places where I would go to NQ and not. So bring that up Thursday, please. Okay. The one other thing I will say about that is that the best proxy for trading ES, if you don't want to trade ES on a correlated day, would be RTY, because RTY will move like a baby version of ES on most days that are correlated. Okay, reading questions. Does my friend trade the open 5 in ES? Yes, he does. If you're talking about the guy who makes a living, does that in surfs. He trades a 5-lot open 5 every day. It is the only trade he does. He's made a 6-figure living doing that for over a decade, and the only other thing he does is surf. He's a little bit younger than me, and before that he used to do construction 3 months a year and then surf 9 months a year. He's one of the most interesting guys I know, one of my friends from childhood, and he's just figured out life. He has I don't give a fuck down to a science, and lives a really comfortable life doing whatever he wants. He's surfed all over the world, and it's fascinating. It's a cool approach, but obviously, you know, that you got to really work hard to make that right for yourself. That's a really good example of a Bubba. Okay, comments about the commissions. Yeah, you know what? If you're an active trader, Clay, commissions are always negotiable. When I'm really trading a lot of a size, you know, I could go to Phillips and say, you know, I don't want to pay $340 anymore, which is what I'm paying right now. You know, I want to pay $275, take it or leave it. 99% of the time they'll say, great, as long as you keep your volume up, you got it. That's how it works. Let's see. So Clay, Jeff, what is your stop in a 1-tick and 2-tick ATM scalps? 7 ticks. But I will often bail much faster than that. But I use a mechanical 7-tick stop. In a lot of volatility, it's very hard to make that work, by the way. What was the question for me about Jigsaw from Phil? About trailing stops, is that what that was? I missed what that was. I don't want to get too buried in Jigsaw in this conversation. Okay, Todd Griggs, in SC with their Denali field, you can get order flow, including pulling and stacking. All you have to do is set the record on for a particular instrument, yada, yada, yada. Okay, great. If that works for you, cool. I don't find replay as useful at all because I'm in the market every day, Todd, and you could put up a tape from 6 months ago and I'll say, oh yeah, I've seen that before. And maybe I couldn't tell you what day it was, but my brain recognizes the pattern, and that's wrong. I don't want it to do that. So that's why I tell you that it's really useless to a pro trader. I get that becoming a pro trader, using it, it's a tool, but understand that I don't know a single example of a professional prop trader in the order flow space that uses replay or backtesting for that matter. Lee, can you chime in? Do you know anyone that does those two things or either of those?
No, because if you're a professional trader, you're trading every day.
Right.
You may well, you'll do a feasibility study on some hypotheses, but you're not going to get accurate backtesting results. You've got to do it live.
Yep. Oh, great questions coming. Thank you, Lee. That's totally true. And okay, let's come back to talking about that more. And I want to just jump in on the CL and GC question. And let's stay on the setups, guys, or we're just not going to finish. And great questions and great points. I don't want to discourage that, but I know I have a habit of letting it just roll, and I'm going to shut it down if it does. So I don't use trailing changes stops in anywhere. I don't trail anywhere because by the time a platform can trail, it's too late. I'll do that manually. It requires too much interaction to trail. The only exception to that is overnight. If I put on a trade overnight and I'm going to go to bed, I'll trail a profitable stop. Okay, and that applies to any setup. Now, the question was from Michael Glass and from somebody right after him, James. Okay, so how do you exit one of these? Great question. As soon as it stops working. It's that simple. So, and I will show you this live and I'll give you lots of examples of it, but the Open 5A is very simple. You know, if you want to find an easy newbie way to trade it, just pop up the 15-second chart and, you know, let's just say this was the opening 5 for fun. I don't want to go back and look for it. So let's just say this was it right here, okay? And you were watching 15-second bars and it did this and then it got down here. You know, that would be my way of thinking, okay, I got to be long and I'm going to get long there and I'm going to ride it until the long stops working and probably keep a stop under it by, you know, depending on the price action, a couple of ticks maybe. You know, it really depends. I've had Open 5 trades become all day trades, guys, where, you know, I got short at the open and the market never looked back and I never took the trade off. That's the beauty of scaling at the Open 5. You can leave one on, you know. But having said that, you need to teach yourself that your priority in this trade is to take profits. You got them, take them. That's the long and short answer. Okay. Christine, so when you say overwhelming momentum one way, on the example where it head faked first, do you enter short when price starts heading down? Okay, that's a great question. And Lee and I are both going to answer that question. I'm going to tell you an answer that's going to sound like I'm punting. But my answer to that is I'm looking in the 15-second chart or the dome are a good way to do that, because what I'm trying to do is look at the synthesis of price movement and the delta or the action on the bars. So yeah, what you're saying is right. The thing that immediately is going to alert me to a head fake is going to be a move one way that just doesn't have anybody getting on board. So when I see that, my first notion, and again, this is often in the first 15 seconds or the first 30 seconds, I've been screwed enough times by head fakes that I've learned to look for them. So my definition of the head fake is there a move that starts to go one way, but yes, Christine, as soon as it starts going the other way, it catches my attention that this could be the real one. And that's when I tune into the volume. Okay, Lee, you want to jump in on that too?
Yeah, and so if I'm scalping the open, I'll do the same thing, but I'm reading, let's think of it as the developing footprint of whatever time frame, 1 minute, 30 minutes, it doesn't matter. I'm reading the volume no differently to as if I was reading it in the dome. So the head fake, we might see a typical volume pattern, a reversal pattern in the mini footprint in the dome or on our footprint that we're looking at. That can be our clue. Then as we're going the other way, we're just looking for reasons that it's not failing. So if we're auctioning down and we're not seeing exhaustion, we're not seeing a price rejector, we're not seeing that the auction has finished, that's our clue to stay in the trade. And it's really simple. We're just reading the volume in the dome on the footprint as to what is printing right now. And when Jeff says, you know, it's finished when it's finished, it's because we see something in the volume that tells us the move's finished. And earlier, Jeff, when you showed an example, you know, had the big delta and it's on the footprint, I think.
Yeah.
What people need to understand, that delta is after the fact, it's when the bar has closed. So you might be looking for the delta to flip over from positive to negative, and that might be your clue to get in, or you might see some overwhelming aggressive selling in this case. And the way I trade this, I call it my LGBC setup, which stands for let's go back to that place which we traded at before, as well as trading momentum, which I'm reading within the dome or in the footprint. I'm mindful of where are the next potential inflection points that might stop us, which other people care about. And we'll often see during Open 5, or as I call an LGBC trade, we will move in one direction to a previous structural level. It might be TPO value area or POC or value area or something. It doesn't matter what it is, but it's something that lots of people see. So I combine an awareness of how far we might go, and I try and squeeze as much out of it as I can, but I'm reading the volume in the direction of travel to look for reasons to stay in the trade. In other words, is there anything telling me it's stopped? If there isn't, I'm going to just hold on to this.
Great stuff. And this is, again, such a classic example of the intersection between what Lee and I do and how we're both looking at very much the same thing, but in a little bit different way. And the primary difference is really the time frame we're looking at it. But so Christine, here's a perfect example of your question. And look at it right here. Okay, this was we opened right here. Okay, so, and these are 45 seconds. So we open, okay, we drift up. And there was some aggression in there. These big blue, I stretched it out earlier and then unstretched it so we could see them side by side. But there's some pretty good aggression on the buy side right in there, pushing it up. And then look right at this point here, when it got to what became the open 5 high, right at 6:33, 3 minutes in, it literally just, the buyers just stopped, and the sellers came in so aggressively that the next tick down was here. Okay, that was 25, it's a half a point drop before we got another print. Okay, why? Because sellers just said, all right, there's your spot. And then, you've heard me use that term before. You always want to be on the side of something when that happens. To me, you just could not have gotten a clearer signal, and you didn't have to get in there. You could have got in here. You could have got in here. This gave you a lot of room for this trade to work. And then when it stopped working, it's pretty obvious. It comes down, it just stops going down. So the trade's over because it starts going the other way. And if you said to yourself, okay, again, maybe that's the long now. So, on a first hour low kind of a basis, or an opening 5 low, maybe this is a long. Price change direction. Why not jump in there and see if the trade works? And, obviously on this time frame, it worked really nicely. Even on this one, if you just nibbled in there, look what happens. You're just never wrong. This is why you hear from Jeff over and over again, good trades work right away. If your notion was that this was a good place to test the structure of that low by getting long and putting a stop just below it, you would have been exactly right, and the market would have rewarded you by letting you stay long. If it was me, I would have started being nervous back up at the open 5 high. So I wouldn't have necessarily exited here because it went through it and then it came back and tested, but that would have been maybe a place to take some off, that kind of thing. And then look what happened. It blasted right away from it again. So this is a really good lesson in the intersection between structure, of the little footprints, and then price action, which is reversal, H-Momo down, ebb and flow, H-Momo away. So you see how these concepts all fit together if you give yourself, a little time to let them fit together.
Jeff, sorry,
yes.
I just want to chime in on that as well. It's to the point that David made earlier, saying, how would you, what was the question? Is it to the effect of what would you do during periods of low volatility?
Yes, exactly.
And I can perceive that people are mentally visualizing price action with a series of candlesticks, and ebb and flow is going up and down through support and resistance because they're horizontal lines. Yet we can see it all within the numbers on the footprinter in the dome because we're just bouncing around, and your tell, once you read stuff vertically, is by reading the numbers in the volume or seeing the impact on the tape. And you can do that without needing the whole width of your monitor to go, oh, in the past 20 bars, we've got ebb and flow between here and here, and that ebb and flow might only be 3 ticks. You'll see the same thing develop within 3 ticks of volume within the footprint or the profile on the dome.
That is so true. And here's a classic example. This is the one I put up in the Slack. I mean, we're drifting along. This is just after, settlement, going into the close on a Friday night. You think, remember I kept saying there's always great opportunities there if you just think that people have to get flat. So here was a really good example. This is above the first hour high, above the first hour high. It is the previous day high, okay? And right up there, you've got a 00 print, and then it just stops. And then again, here's one of these 45-second gap down footprints. The next print was 16 more here. you know, and we went from 54.75 to 52.75. You don't get much better signal that the buyers are done and people are taking profits. So you could have hit a short right there. Market order, okay? Look at, you know, what this one is, 52.50 down to 51 even, and then the next one goes from there down to 49, and then it starts to go up. So you bail out of that with a market order and you just made 3 points. And I mean, the market could not have telegraphed to you in price action more explicitly what was happening at that structural previous day high level. It just isn't simpler than that if you just understand what you're seeing and what Lee just said. And here's another example. The same time of day, right at the close, it came down and it retested the first hour high, the blue line. And it sold into it, and then we got down there and whoever was selling said, okay, I'm done. And then the buyers came in. And again, the same thing applies. If you got long there with just the idea being, it's the first hour high, it's an inflection point. If I get long there and I stick my stop a tick or two under it, after it telegraphs that reversal this clearly, what have I got to lose? And I'll ride it up, and look at this, it made it right. That was the trade up to the first hour, or to the previous day high. So, I mean, the market will tell you what's going on if you learn to listen. And there's a really important lesson there. All right, we have to keep moving. I will come back to the volume profile as a placeholder for bars going into the path. That's an interesting way to put it. Yeah, I'm not sure how I'm not sure if I agree or don't disagree with that. I don't want to think about it too much right now while I'm teaching. All right, so Open 5A, we've talked about that one. We've also explained a lot about how you play the first hour high and low. It's really not all that different. I just showed you some examples of it. Any inflection point, you could play that way. You're looking for a shift from ebb and flow to high momentum. I just showed you 2 of those. It's wait mode because it often doesn't happen really fast like it does at the Open 5A. It happens a little bit slower. You have to give it a little time to develop. You can scale into it. You can put one on and see if it works. That's what wait mode means, regardless of what the setup is, okay? Because of, again, by definition, this is only going to occur during regular trading hours. So whatever the instrument is. Now, a question that was asked a while ago, you know, about other instruments. Yeah, this all pretty much applies. The gold and oil respond really, really well to first hour high and low initial balance. Most things do that are liquid. So, so again, what I'm saying right now is that a lot of the idea for managing around inflection points applies to any of the setups, but particularly to this one, first hour high and low. So we're going to come back to that in just a minute. I want to keep moving. HMOMO is the one that's really easy. Again, the only thing you can do is overthink it. It occurs only when there's high momentum on the tape. High momentum doesn't necessarily mean speed. Momentum is really more about the direction and the energy than it is the speed, because sometimes high momentum slows down and consolidates. And so you'll often get a back and forth in a trending move between a high momentum event and ebb and flow. So I want to show you some examples of that. And let's see, I see a question here I'm going to stop and take. Okay, let me read a few of these. All right, Jonathan said, so the shift from HMOMO to ebb and flow, not HMOMO or yeah, no, that was wrong. What Lee said is correct. It's Open 5B2, the first hour high and low, because those are the 2 inflection points. And then it's the change of price action at the inflection points that is the ebb and flow versus high momentum, or ebb and flow to high momentum. And that's what I'm about to show you, okay? But that's an important distinction. And this is very common behavior. I lost my charts. Let's see. Okay. So, and I'm gonna put this out on 1 minute, just so I'm just gonna show you lots of examples of this. Okay. So what we're doing right now is we're understanding high momentum, but we're gonna see a lot of places where it's occurring around open 5s and where it's occurring around first hour high and lows, and we may bump our heads into an H reversal along the way. So again, just so you guys understand what we're doing right now, we're at 1 hour and 15 minutes again. So I'm trying to keep it moving. Right now we're showing HMOMO, but we're gonna bump our heads on some other setups. HMOMO is a scalp setup. It can occur anytime. You go with it and you treat it just like the Open 5 with respect to risk management. Okay, so here's a 1-minute chart, and literally what I'm gonna do is I am gonna just go get a bunch of data for 30 days, and I'm gonna give that a second to come up. Once it is, I'm literally just, and this is why I don't believe in replay or back testing. I'm literally just gonna pick a spot, and then I'm gonna explain what happened there. And none of these are premeditated. I haven't looked at any of this before to prepare for this session. I didn't make slides. I'm literally just going to show you guys how to read it while it's happening. A 1 minute is a good kind of general time frame to do that, and it's educational. Let me just give it another couple of seconds here to populate the data, and give me a second to take a deep breath here and catch let my blood sugar catch up with my lungs. So give me a second. All righty. And let's see where we're at here. That works. Okay. All right. So the chart's got data now, and I'm literally just going to scroll randomly back. And then I'm going to say, stop. Okay. So let's pick a spot. We have a gap down there. Let's just scroll till there's something interesting. So, oh, beautiful. Okay. I have no idea what day this is. We could look up the date, but it doesn't matter. We're looking at price action, okay? So what time of day it is important. Let's go back a little bit so you can just understand that in my world, this is 7:30. So that was the first hour low right there, okay? So just pick a spot. What's happening right here? Okay, what's happening right here is ebb and flow. The price action is really quiet. Look at the volume up versus the volume down. It's not aggressively going one way or another. And then again, remember that this up here is the first hour high. This is the first hour low. This pink line here, based on where it is in this. Again, I'm not going to go back and look at the day, but this was the opening 5 high because obviously it went up to a higher first hour high there, okay? Now, again, the only thing critical is that it's the open 5B at this point, because the second it got broken, and then look here, broken and then retested, you could, for those of you that want confirmation, that's it. But I like to trade the break of this. Look what happened. Look at the difference in price action of this section, and I'm gonna just draw a rectangle there real quickly. I'll remove it later so you understand what I'm talking about. This is ebb and flow, right? Whoops, sorry. I drew that wrong. Okay, that is ebb and flow. And then we left it, and we left it with HMOMO. Okay, does everybody see the difference? If this was price discovery, it would be really big swings, but it would be back and forth. Because it's doing that, but in a really tight little range, it's ebb and flow. Everybody pretty much agrees here, as opposed to price discovery where they don't agree. And then as soon as we leave that area, we get HMOMO. So let's go back and look at this. HMOMO. What kind of price action? It's HMOMO. What is that? It can vary in speed and be high momentum, but it's one way. That's the key word, one way, okay? Is there anybody that would argue that this is one way? Of course not. It's obviously one way, okay? What else? Can occur unexpectedly. Notice how I don't even care what day this is, because we're right at a first hour high or low. That's relevant, and I'm going to use that to show an example of first hour high and low. But other than that, the time of the day for this being an HMOMO move is completely irrelevant. Everybody following that? Okay, and I am going to stop for questions in a minute. I'm also going to stop for blood sugar and go get some honey because I'm getting dizzy. Okay, number 2, overwhelming MOMO. Remember, I don't mean trend. I mean MOMO. Again, I don't care that we're going down. I just care that we left ebb and flow aggressively on volume, okay? treat it just like it's the opening 5. You get in on a market order. HMOMOs are often driven by news or a level break that a bunch of people are watching. You just jump in there and you go. The only thing that I get really mindful of when I get in an HMOMO is the next thing here, a high volume reversal, because those overwhelmingly occur when you're going from HMOMO to HMOMO. In other words, you have a high volume event that creates momentum. Very frequently, this will turn around and go right back the other way. In this case, it didn't, but that's very common. So we're going to talk about both of those things next. Lee, I'm going to let you host for just a moment while I go get some Manuka honey for blood sugar, and then I'll come back and take questions. So please don't say anything that you want me to hear or elaborate on, because I won't be here for about a minute. Okay.
Well, that's challenging, because
yes.
I thought I was going to speak to Michael's point, but maybe
all right.
I won't.
I want to talk about Michael's point because it's a really good one. But why don't you just maybe I don't know, do a Monty Python routine or something for a minute? I'll be right back.
No, I'm not going to sing a song, Amy. I think we will talk through Michael's point, because it's a good question, and we can help transition the thinking on this away from wicks and candlesticks and stuff like that. Let's just have a look at some of the other questions which are here. There's also a concept around the Open 5 which I want to bring up with Jeff, and it relates to news and HMOMO and events. We'll get back to that in AOB. What else have we got? Yes, David, Atlee, hit me.
He's back.
Okay, so, well, David is typing a question, but
okay, what about Michael's? Have we covered that one yet, or let's see?
No, because you may have wanted to hear it.
So, all right, let me answer his first one first, and then I'll let you answer as well. So, Michael's saying, I assume your question you're talking about is the higher highs, higher low question. So, Michael says, do you consider higher lows or lower highs during ebb and flow as a tell? And what Lee said, the better tells are the shape of the delta over time or the volume vertically. Do you want to elaborate on that? I agree.
Yeah, because it's thinking horizontally as soon as we get into higher highs, lower lows, all this stuff, and we might see a spring or an upthrust within this range. But look at all the horizontal space, i.e. time, which we're wasting in order to assess it. So on the chart we've got there, which is what, a 1 minute chart?
Yeah.
So from your bar, which is around 7:35, we're not really seeing till about, make it easy for me by moving it, Jeff. So from 7:35 to about 7:50 is the first time we can establish where the high of it is. Look at all that time we've wasted to establish what the upper bound is, where we could either be looking at the shape of the delta, and it's clearly transitioning down, so the buying pressure is reducing, or we could also be looking at the accumulation of the volume in the footprint of the dome at the price levels near the top. And we'll also have a sense as to what's going on. So we don't need to waste all this horizontal axis of waiting to see what's happening when we can read it all in the volume. Here's the course volume, that's the delta at the bottom, or the actual volume prints in the footprint of the dome.
I'm moving that just, I'm not trying to disorient you, but what you're saying is really important, and we could talk about all the rest of the setups with this. So this was May 1st. I was going back to see the date because I'm going to get a footprint. We're going to put a footprint right next to it. And we're going to compare. Yeah, and that's the point you're making is a great one, and it's critical. And Michael, do you understand what he's saying?
I think from his poster, you know what, how are you going to orient the type on that poster, Michael? It's got to read from top to bottom.
Exactly. Okay, so hang on. Let's just get right up. Sorry, I'm doing this really slowly. I just don't want to race by it. I want to get this chart exactly where I want it, and then I'm going to grab the footprint, which I've got next to it. So it's May 1st going into the open is what we want. And that's going to be right here. And again, this is the beauty of what we can do here at TRG, you know, not only with our format, but with the fact that Lee and I, you know, have different styles and approaches. And I think this is a really valuable example. And that's why I'm literally spending all this time rebuilding it for you, because, you know, this question that I asked at the beginning, this example is the epitome of this question. I mean, I'm literally showing you And Lee just commented on a perfect example of this question. So give me a minute here. I've got to literally reorient everything I normally do here and change all of my settings here with scroll bars and all kinds of nonsense I don't usually have. So bear
while
with
you're
me.
doing that, Jeff, like to Michael's point, this is the value of running your monitors in portrait orientation.
Yes, it is.
You're reducing how much horizontal space, which we've all historically been spoofed into thinking is important. I've got to see, look back over time, look back over time. No, how does Peter express it? He says, price moves up and down.
Yes.
It doesn't move horizontally. So we care about what's happening relatively at these different price levels, which is the accumulation of volume. But price, so the areas at which volume is accumulating, is something we are reading vertically, just like that delta profile that was on the right of the chart just then that's now disappeared. That's what matters.
Yeah, and we'll get it back up in a minute. I'm populating the data, and I had to get it far enough back to get to May 1st. I normally don't keep that much data in a footprint, and it'll take a minute to go get it. But boy, here's a really good example of why I won't use something like MZPack anymore. If I tried to do this with MZPack, go back and get a footprint from 15 days ago on a 1-minute chart, I could drive to Los Angeles and back, which is 90 miles away while it's doing that. I mean, it's pathetic. And, again, that just has to do with the way the code's built, and it's of no value to me if I can't ask a question and get an answer like that. So that answers that for many of you. So anyway, give me a minute here to just get off. It should be all the way back to the beginning of this range if I put the range correct. So let me scroll back there, and then I'll go right to left, and that should get us there. And again, I feel like I'm wasting time, but I'm not. So I hope that everyone agrees with that. I think this is a really good example.
Because this relates to all the other setups, doesn't it? It's the interpretation of volume around the price action.
Exactly, it totally does. So, and of course, one of the flaws I'm realizing right now is that I don't display the first hour high and low the same way on my footprint charts. It's going to be really hard for me to find that exact point. Give me a minute. I will endeavor to do it. It should be this footprint right now that I'm scrolling back on. This should be the right day. If it's not, it's going to be frustrating.
While you're doing that, Jeff, I'm going to throw in a philosophical point around
please
Open5. And, Open5 is because all this trading energy is entering the market in that first 5 minutes, regular trading hours. Now, there's an interesting thing to go and study for yourself, which is to think about news events, CL inventories, as an example, FOMC, whatever. We get price discovery because of less liquidity going on. But it was once explained to me in the prop firm that the open is just like a news event because you've got all the new participation coming into the market. And it can be very interesting to regard a period after an influx of new information as a new trading range. So on CL, on the inventories, give it 5 minutes, settle down and assimilate the new information. You can't trade the Open5A, you can't do the momentum play. But as the market has assimilated new information, you can potentially regard there being a new opening range on the day because this important new information has established new parameters for the market, and that's something to go off and research and play with.
Totally agree with that, and that is a great statement to listen closely to, guys. I'm getting the one thing Ninja drives me nuts on is the date with these footprints. This is the poncho. It only displays right there in a tiny little font. So getting to May 1 has been very challenging, but I think I'm there now. So bear with me one more moment, and I think we finally got there. It should be the next day after this one if we've got this right. So that should be the next one coming up. Okay, what did it do? Did it cut me off at May 1st? This should be it right here. Sorry, guys, I didn't expect this to be this time consuming. But let's see. Okay, it should be the very, there it is. Okay. Boom. Okay, we got the right spot. Again, my apologies, but this is worth the energy to do. Okay. There we are. We got it. After much ado. All right.
I've forgotten the question.
I know, I have too. Basically, we're talking about comparing the footprint right here at this first hour high at 57 and looking at, or excuse me, the footprint to the candle and looking at the price action versus the structural. And then all the examples around the first hour high and low. That's what we're trying to do. But
and it was a faster candlestick, wasn't it, with the ebb and flow, where we were looking at the transition through it, yeah.
Exactly. We're trying to see a very fast footprint of it. And it, unfortunately, is just getting difficult to get right to that point, but I've got it now, I think. Okay, so if we see the first hour high being painted, shoot, hang on. All right, yeah, it's going to be harder to do this than I thought with Poncho, but it's doable. For example, right here and right here, that's 720 and that's 725 on a 1 minute footprint. And if you just look there, you know, sellers just stop selling, and you know the volume goes down and the deltas go down until it's just exhausted. Again, you know, we've talked about that a bunch of times, and then it reverses, and that, you know, that behavior on the candlesticks is much harder to see, but this is the key difference right here. Okay, so let me get rid of that drawing. Whoops.
Oh, that was the area we were talking about, wasn't it? It was 735.
Yeah, it's this area we were talking about right over here. We were looking at that ebb and flow, and that's what I'm trying to get side by side there. So
yeah, so we want to see what happens from 7:35 through to 8 o'clock, 7:50 on the footprint.
And there's a way to take this drawing object and make it appear everywhere. It'll show up over here. You know what? Let me just do it again. Remove drawing objects. Yes. And then we're going to do drawing tools. Come on, Jeff. You're not that tired. Rectangle. There we go. And then I should be able to do that. And then its properties should be show on all. Well, that's where it is. I don't know why. Oh, here it is. Okay, visible, locked, auto scale. I don't know. It used to be easier to do that. Anyway, I'll just draw it again. So what are we looking at here? We're looking at 32. So, okay, so there it is right there. So.
Actually, it's that big candle on the right, isn't it? That's the first candle. That's
this is 736. So hang on, I'm sorry.
That's the start of that rectangle.
You're right. You're right. It is that. Okay, so hold on. Get out of drawing mode. And let's just scoot over a bit. There it is. Yes. Wow. It is totally different there, isn't it? Let's see. Hold on. I want to get lots of screen space to make this easy to see. So let's get rid of you and let's put you over here. I hope you guys understand that we're spending all the time laying this out because it's just such a good example of how to see this. Boom. Okay. There it is. So this is 731. And hold on. I think you lead this.
I think if you just nudge the footprint to the left to make it a bit earlier, then we're going to see everything we need to see.
Okay, hang on. There it is.
No, too far left.
Hang on. I know. I'm sorry.
Okay.
Keeping it scaled is really hard because it wants to do auto scale, and then we won't be able to read it. So. Okay, so. Okay, it is this area right here, correct?
No, keep going.
This 733. All right, are you sure? Because I'm seeing 729.
Where we've popped up.
Well, I'm talking about both of them. You're talking about just part of it. So, okay, I see what you're saying. All right, so if I go back to, so 7, I'm going to just put
That's where we want to be.
Yeah, I see what you're saying. All right, I was showing kind of the before leading into it or not. But yeah, what you're saying is from, so let me just draw the rectangle. I get what you're saying. So, okay.
All this trouble's help, Michael.
I know.
It's like a private members club.
Okay, so that's a good, right? Correct?
Perfect. Yeah.
Okay, so let's just leave this up. Do you guys get the point that there's so much more information in here that you could see that's telling you what's going on up there? And now that you've seen the box area I'm talking about, let me get rid of that that drawing. God, this and then damn it. And then zoom in on it again. And it's just really hard to do this with this particular footprint software, but damn it. All right, that's as close as I'm going to be able to do it. But look right here when it left that area, everybody who's trying to get this. Let me try to expand it a little bit. You see the difference right on the line, the structural difference? Look at the selling right here. As soon as the second, attempt, it's not because it's the second attempt, it's just because they teased it a little bit. And then, as it aggressively came in there, you could see the sellers just emboldened for whatever reason. But, it was just a really good entry because of that. And so that same type of behavior you're going to see, and this is what we've been trying to set up for the rest of this conversation. So here's the first hour low now. And we can see that same thing kind of occurs down there. It will often overshoot, because the order flow takes out the retail traders. That's that 8-tick dance thing. But then, once it consolidates, it will. And, look at this. We're on 1 minute. This can take time, guys. But watch what happens. Just by doing what I'm doing, you can see the difference between ebb and flow and high momentum. Just watch as these go by as I do this. Okay.
On top of that, Jeff, on the 752 footprint.
Okay, 752.
So that's where it just or 751, just to that one. So that's where we for the first time test. What is the high? So to Michael's point of, higher highs, lower lows, Well,
so that's right here. Yeah.
Yeah. So at the top of it, we've got positive delta. So we've got aggressive buying. It looks to me like we've got our price rejector pattern. We're running out of buys at the top. Mm-hmm. It's 57 versus 63.
Can you guys all see that okay real quick? I just want to make sure that I'm dialed in on the spot. Everyone with us here?
Yeah, so we're going 5252 for 1135, 57. It's completed auction. So it got to that's an upthrust.
It's exactly what it is.
It poked its nose out of the edge. It ran out of energy. The aggressive market orders couldn't get anywhere. We come back down. So high, low, low. Don't care. We just need to read those 3 or 4 price levels at the top,
right?
Which can be in the dome, on your recent volume or current in jigsaw language, or in a footprint. Or if you were looking at 1 hour footprint, it wouldn't matter. You'd see the same pattern through that range of prices.
Exactly. And this is a perfect example of the difference between price action and that's what we want. And structure. Structurally, you just described a top. And from a price action point of view, all the other stuff was happening too. We had the lower highs. And we had an attempt to get back up there that failed. So there's a perfect upthrust right there. And it pushed up. It couldn't take out the high. And then on much higher volume, the sellers came in and they started pushing it down. This is once we finally got it up, it's a really good example. So what I want to encourage all of you to do, I'm not going to show you that anymore. I'm just going to tell you, and I'm going to tell you again, this is fact. This isn't opinion anymore. Okay, that this exact same thing occurs at any inflection point. You just have to find one and look at it. So, if I take my 1 minute chart here and I just, bring it current and just pick a spot, go in and look at the footprint right around there when we're teasing that first hour high on this chart, or set it at 5 minutes, which is where I generally keep it at. And go look at it, a week ago. Or for those of you, that were asking me about the NASDAQ, pull up the NASDAQ. And again, just pick a spot. Look at this. This is Thursday's first hour low in the NASDAQ. I'm going to say this is a fact. This isn't Jeff's opinion or Lee's opinion. If you look at the bars right at the bottom of this formation and pull up the footprints, you're going to see exactly what we just showed you on the selling behavior, but you're going to see the opposite of it. You're going to see buying behavior. And I don't care if you look at it from a price action point of view by looking at, the transition from one 15-second bar to the next, and, higher highs and lower, higher lows and higher highs. Whatever approach you decide to use doesn't matter, because you're dialed in on the price action, and that's what matters. So if you think about it this way, and this is really the best overall message of this session, and then I'm going to just elaborate on the rest of the setups at this point and see what else is not clear, because I think we made that point pretty well by taking all that time to set it up. And the thing I want to go to next is I'm going back to first of all, I'm housekeeping. Give me a moment to do that. And I can't remember which one of these. That's my second chart, I think. Yeah, it is. So just get all this stuff out of the way, and okay. Now, thank you. That's where I wanted to be. All right, so we've talked about this one. We've talked about this one. We've talked about this one. We've shown you what it looks like when they're reversing and how you need to tune in on the order flow to see that. And you can do that a number of different ways. You don't even need a footprint to do it. It's useful, but you can do it on very, very fast bar charts, just looking at the transition from one to the other, as Michael was asking about. If you look at the behavior from one to the other, or the behavior at very significant inflection points, it happens over and over again. Every single day you see this going on in almost every instrument, certainly in the ones that I follow closely. So what are the different parameters of these other setups? We've gotten to here, and we covered these three, pretty extensively. So let's just talk about the other three quickly. The session ledge one, this is that breakout trade that when we're at a session ledge at the top, and I tell you over and over again that, there's just 99% chance it's going to break out. And again, this is an easy one to see on virtually any time frame. You just need a session. And so, an example of that during regular trading hours would have been, here was one right here. That was the session low from overnight. And so the second we broke through there, that would have been a session ledge. And those are always aggressive, but they frequently do reverse, just like that one did. So, so what you're looking for with those, number one, you need to be in session. So this is gonna, only occur for the session you're looking at. So if you're looking at the overnight session, you want to be at the very beginning of regular trading hours, or you want to be in the overnight. And same thing at any, group of those ledges. And so here's another way to look at that, is to take my 5-minute view and just go further out. And you see me do this frequently in the morning, maybe turn it into a 15-minute view. And that's how you find the ledges before the session opens. And during the overnight, and basically you're just looking for, all right, listen, this is where you write this down. Okay, this is the important part for this setup. Okay, so this is edge and range session ledge. Say that fast 5 times. Edge, range, session, ledge. It occurs, like many of them do, in a transition from ebb and flow to high momentum. It's a scalp setup any time of the day, but you've got to be looking at the ledges for the time of the day you're on. So in regular trading hours, the current session and the previous session and the previous regular trading hours, etc. That's how you have to think that way. You have to look backwards in sessions. So here's an example. These are 15 minutes. If I was looking at this for the open for Sunday, regular trading hours, session high, that's a ledge. It was also the overnight ledge, or very close to it, right? It also happens to be that ledge and that ledge. So this area right up here to me would be very significant going north. Likewise, ledges to the downside. There was one there, it got broken. There was one there, it got broken. It held overnight. That's always important. We rallied away from it. This was overnight again. That was the ledge. As soon as regular trading hours opened, it held. And here we are on Sunday night. So those are ledges. The distinction between a ledge and an edge is important. An edge and a ledge, one is a subset of the other. Ledge with an L is only at the far extremes for the session. Edge with an E is inside of a volume profile. Doesn't matter if it's that edge or this edge, it's the edge of a high volume node. Important distinction. So edge, 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 edge. Okay, there's a bunch of them. Ledge, 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 ledge. Okay? I will stop and pause because those are some important points. And I got to keep it moving though, because otherwise we're just going to get buried on time. I'm going to just hard end this at 2 hours, regardless of where we are. So we'll put that up and we'll take questions. Edge of any bulge. The right way to say that is an edge is the edge of a high volume node, not really a bulge, but bulge works too. Okay, any other questions in there about that? Did I miss anything, Lee, about that idea? Edge versus ledge, really important. It's an intellectual concept or a visual concept. Beyond that, it matters in the setups a lot. High volume nodes occur and create edges. The versions of those that occur at the edge of a session are ledges and are more important than edges. Everybody got it? Edge is the ledge of a high volume node. Yeah, don't say that. That's too many words. Not yes and no. It's sort of, kind of, but think of ledges as only the edge of sessions. Okay, that's the key part there. Sessions. If you look at the chart that I just threw up, and again, any instrument doesn't matter. Those of you asked me about gold or oil. Yeah, here's gold. It will behave exactly the same way. Gold was a beautiful trade most days. Look at how well it respected the first hour low. And look at that. Just buy the first hour low. Buy the first hour, sell the first hour high. So, really, really clear. Okay, ledge is the top of a session. Ledge is the other side of a session. Listen carefully, if a ledge like this one occurs close to another ledge, that's important. Those tend to get broken like this violently. Ledge, ledge, ledge. If it's going to go through that, look for it to do it very aggressively. Okay? That's all you need to know. Doesn't matter what the instrument is. Pick it. As long as it has a regular session, you will have that happening. And even if it doesn't, you'll get that type of behavior. Okay, so that's this one. You want to look for this transition from ebb and flow to high momentum. And we just went through excruciating detail to show you that on a footprint chart and on a fast time chart that Lee and I just showed you. And go back and look at the recording. You can't miss it. Okay? Use extremes for the edges overnight. Don't try to fade edges that aren't really extreme overnight, or you will get run over. Anita, that applies to the question you asked me about, well, how do I know they're going to go or not? Overnight, you got to get the ones that are really far away, because it's just too easy for anybody to push them. Once a ledge breaks, it's just too easy to keep it going. So you want to wait till those exhaust themselves and then fade them. If you want to go with them, you got to have really fast reactions to do it. So these stats are true, but again, it's harder to trade than that. 99% chance that a ledge will break out, but that doesn't mean you automatically just go with it or automatically fade it. Okay, this is a key point right here about the structure, and I think we elaborated on this a lot. The tells for these inflection point trades, doesn't matter which one really, but particularly the first hour high and low or the open 5B, is in the wave volume, and we just showed you that, or the auction structure, or collectively. Like Lee said, is it getting sold? Is there a zero print there? Is there, reversal? Is there a lack of energy? All those things. Is it being absorbed? Whatever way you want to describe it. But that's where the tells are, and that's really true for this one down here as well. And that's really true at any inflection point. Okay. And this is just, that big one where it goes one end of the range to the other. And I think that's a really good trade for rookies to focus on. That was the trade we were talking about yesterday. Most days are range days. So if you do this well, this edge behavior, if you catch the inflection points or this edge behavior well, you can often do this trade and catch enormous winners, 30, 40 handles. But if you're not thinking this way in HMOMO, you know, ideas about where to get in, you're never going to get good entries on those. Okay, that should make sense to you guys at this point. Okay, the only other things about these last two weight setups, you know, kind of all of this stuff applies to all of them, but this one, you know, there's a distinction here that I made that I want to highlight. That's too dark. On this one, okay? The key to getting this right is the range around the IP, and we just showed you that. Lee and I did. The key to getting this one right, we'll just make it a different color for fun. The key to getting that one right is you got to understand that it's a ranged day. Not a range at any one spot, but that the entire day is behaving like a range. And the way to game that is by watching the first hour highs and lows and how far it gets away from them or if it respects them. And Lee has gone to painstaking detail to explain this to you with one-way breaks and two-way breaks. And, you know, again, it's just beyond our scope to elaborate on that for this session. But those are really good examples of this integration between wave volume or price action and auction structure, and then understanding, you know, these real big opportunities, these weight trades are the big, you know, if you want to get the 10, 15, 20 handle trade in one day, this is where you're going to find them. But having said that, if you're looking for them, you should be looking with an HMOMO or an HV reversal kind of mindset, because that's where these start, and that's going to get you into those with a nice entry. Okay, now what we're going to do, actually we're going to leave that up there. We're just going to undo all the colors I just did. And then we're going to pause for a minute. I'm going to take a break and reheat my coffee. I will be back in 30 seconds. I'm going to ask that Lee not answer any questions till I get back. And when I get back, we're going to have 9 minutes of really good, solid, focused Q&A. So get your questions up in the chat. Make them as specific as you possibly can. That's your assignment. I'll be right back.
How is the weather, Amy? Amy's asked how the weather is. In the UK, it's dull. It's a bit chilly. I'm looking on my iPhone and I'm going to tell you that here west of London, we are currently 16 degrees Celsius. Cloudy, bit of sun, bit warmer next week. What season is it in the UK? We're in the spring, not in the upthrust, because we're in the same hemisphere as America, which is a country that used to belong to the UK until 1776, when you guys just went downhill really badly. Martin's asking, how far west of London? About 25 miles west of London, 40 kilometres. We don't use kilometres. Still going downhill, yeah. So are we. Guitar solo, keyboard solo, Darren. It looks like I've ignited the blue touch paper with some of those comments.
Okay, I'm back and you're talking.
We were chewing the fat.
Chewing the fat. See, if you have an English accent, you can even say chewing the fat and make it sound sophisticated. That's what I loved about my wife. She was not upper class raised. She actually grew up very, you know, there really isn't a middle class in England, but what there is of one, the very low end of it. Her dad, you know, basically just a wage earner, and she started as a secretary at the BBC and worked her way up to running sales and a big chunk of their business, and she could turn that on and off, and I just love that. You know, 1 minute sound Cockney and the next minute sound like, you know, the Queen. and you have obviously a more formal upper class accent there, Lee. So
far from it, I'm proud to be upper working class.
Well, you know, I can just tell by my interactions with you that you have very much, you know, the American you have the British version of what I have. My father dropped out of college to support his sister in law school when his father died, and is a self-made man, but, you know, was one of the principals at Mattel Toys, and, you know, an entrepreneur and a musician and, you know, kind of a hippie. You've used that term. That's accurate.
The similarities just go on and on. I mean, you're gay as well.
Right, that's it. Anyway, but it's just fascinating because that I credit a great deal of what I've learned in life and enjoying life to the fact that I grew up around a lot of rich people, and my dad just refused to allow us to behave that way. And and that's such a great education, because money can really screw your thinking up.
Time.
But it's a useful tool. Okay, let's look at questions.
David's thrown a few up which look pretty good. I think we start after Anita saying okay to David going, could we discuss the mental shift from scalp to weight, as well as the mental shift of ebb and flow to HMOMO one way?
Yeah, those are, those are the things, if you asked me over a beer what the things I still struggle with trading are, everybody, and this is, really, this is good stuff you're about to hear, because, you don't get many 47 years of trading 60-year-old perspectives. And my point of view is really simple on that. It's, gosh, what's a good way to put it? I still make that error when I'm, remember HALT? I said that in one of the sessions. Hungry, angry, lonely, or tired. Anything that makes me less sharp, I make that mistake quicker. So that's the number one thing that's the hardest to do. The transition from scalp to weight, which is not the same as the transition from ebb and flow to high momentum. Understand that. Those are different. But the thing that I've taught myself to do, I literally have a card on my desk, and I've posted pictures of it. One says scalp and it's red, and the other's blue and it says weight. I find I have to find tricks to keep my brain to do that. So I continue to struggle with that. It's a tough one. One of the ways I've been successful at that, David, that might be helpful for you guys, is by using trading partners. And I've done this on and off my whole trading career. In the early 2000s, when I was running Dr. Jeff's day trade clinic, and I was trading with three people, three of us. We traded, all the accounts were owned collectively, and we just basically formed an LLC, and anybody could do anything. This is a lot of trust, right? And the idea was we had different sets of skills. I've mentioned the Brahmin, the Chinese Brahmin, Prince, literally. This is a guy with a billionaire dad, who trades his own little trust fund. He was one of them, and he knows a lot about the Asian markets and currencies and FX and gold, and that's what he does. And I do what I do. And anyway, one of the things we used to do all the time to keep ourselves centered when we were talking live is just to talk about that. Okay, we've got, like, a way that might go in self-talk is, that breakdown we showed you where HMOMO started and, went all the way down to the first hour low. What I would be doing is I would be saying, okay, scalp mode, HMOMO, and then I'm always thinking, red light, green light. If I'm seeing a real red tape, I'm constantly reinforcing my brain to that decision. Okay, yep, I'm still right. Yep, we really have high momentum, but the thing that made me better at that, to answer your question, David, was this. I realized that literally, and I do know the stats, I can't remember what they were, but HMOMO trades become HV reversals. I think, if I'm remembering right, it's about 69% of the time. I got to look it up again, in my metrics. I have this enormous database. It's just an access database of all my trades. And it's a nightmare to search, but I can search it for stuff like that. So using just SQL. So that's important, because you often get HMOMO to HMOMO with HV reversals. And that's a scalp setup. But what that taught me, first thing it did was it taught me to watch for the reversal. And then it also taught me that the transition to weight kind of comes the same way. So let's say I've got HMOMO, okay? And it's moving really fast. I'm in scalp mode. I'm thinking red light, green light. I'm looking where I'm going to take profits. And then one of two things happens, guys. I get an HV reversal, and now I've got HMOMO going the other way. I take profits, and I look for the trade in the other direction. Or oftentimes it will settle down at an old inflection point after doing that. And we just showed you this, that first hour low trade that became a long. So when I see it hit an inflection point coming from HMOMO, I shift my brain to wait mode. And I say, okay, I want to take profits here. And I want to start looking for an entry that I might be in for a while. So the way I do that is I often poke into trades. I've mentioned that a few times. Like, in the micro, I'll put a one lot on. I've often do this in the ES as well, though. I'll buy one at the market, nothing but a catastrophic stop, and then I will defend my decision that we are going to hold that IP in my head. And again, I go back to this red light, green light, and I watch the behavior, the wave behavior and the auction structure around the IP. And Lee and I just did that for you at that example of that opening 5 high that got sold and that first hour low that got bought. So that's, if you want to go look, is that IP holding? Is it getting bought? Is it getting sold? What's the energy around it? You need to mentally zoom out to make that work. And so it's actually a fairly simple idea to make this scalp weight transition, but in practice, it's much, much harder than it sounds.
I think it's about being cognizant of the structure, and in part that structure is still time of day related. If we're thinking open 5B to first hour high low.
Absolutely, and the one setup where it's the most important is this bottom one. If you get it right here, you can just sit in your short or long that you put on at the first hour high, or at the unfinished business filling in, or whatever. Pick your approach. Again, when Lee's talking about it, he's not talking about something that's incredibly different than me. It's just different ways of measuring it in slightly different time frames. And but the best trades you will ever get are Lee's A to B's or my edge range edge to edges, because those are the 20-30 pointers that are no brainers, and you can use MAE of 3 ticks, because that's how they work. But the problem frequently, with people like David and people like Jeff, is that, we're in there, trading the open 5 and we're scalping and boom, 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 and then it's HMO, and by the time this trade sets up, or this trade sets up,
you're exhausted.
I'm exhausted and I need to go to bed for 2 hours and I miss it. So, it's a lot about your individual personal management, and and being your own Bubba and having trading partners. The advantage of having that guy in Beijing as my trading partner, and again, I just call him the Brahmin. So if I ever refer to the Brahmin, that's him. Is, here's a guy, imagine this, okay? I'm successful trading. I'm happy with where I am. And, I came from a father that never graduated from college. I've gone to grad school. I've started a bunch of businesses, all right, so that's good enough. You can die happy. You've done what you want to do in life, right? Imagine the guy whose dad's a billionaire. He's got $100 million trust fund. He can play in the market. Losing $1 million isn't even going to affect his balance of his. It's a rounding error in the interest he's making this week. So, he can trade just totally different than me. But he's not stupid. He knows what he's doing. So having somebody like that as a trading partner can really be an asset. So I'm really encouraging you to understand that, there's a lot of different ways to trade. There's a lot of different sizes of accounts. But when push comes to shove, if you understand price action, and if you understand it within the context of the market structure on any given day or given overnight, then if you can't trade profitably over time, there's only one thing wrong with you, and it's your discipline. And I can say what I just said unequivocally, and I know a bunch of you agree with me. Those of you that are, that have had a funded account and failed it, and now you're funded again, or you've done that in your own personal accounts, like I've done. I've blown up a bunch of accounts. Trust me. And the lesson's always the same. If I build a good structure and I stick with it, quite literally, guys, I don't lose money. I mean, I once went like, all right, this is a question I get asked a lot. What's the longest winning streak you have ever had? All right, you ready? 29 months without a loser, ever, scalping. Can you imagine? I mean, but boy, did that screw me up. I didn't learn anything when I was doing it. I was just trading one setup and it was working, and I just thought I was a genius. And, so from a profitability standpoint, it was a nice stretch. But from a growing as a trader point of view, it was dead time. And fortunately, I did it when I was sick. I was recovering from back surgery, and I was loaded on narcotics most of the time. So it was real easy for me to either be disciplined or not. And that was the approach I took. I really couldn't do much else. So, a good example of finding your Bubba and adapting it to your life when you need to. That's important also. All right, we are exactly at 2 hours. So we're going to have one more shot at questions. And Lee, can you send me that in an email, that thing you sent me privately, please?
Yeah, sure.
Thank you. Okay. All right. So we're going to take one more shot at questions. Have I missed any big questions, Lee?
I think we've been talking around it, and
I think
Kevin
we
has
have,
just
yeah.
mentioned, having certain time zones for each mode. He's been scalping first half hour and wait for first hour high low. So yeah, exactly.
Yeah,
This
that's
is
this approach right here.
context. Yeah, and it's the price action based process is still taking that into account. And it's a very viable way of trading. You scalp to build up some P&L, and then with that P&L, you can decide to apply that P&L later in the day to more size.
Yep, that is exactly, Kevin, the notion of what this was. And this is the process I taught you guys in the workshop. What I'm telling you, though, and you're at the stage, you're one of the people I was talking about, that you're ready to go to the next step, okay? And you're a classic example. And there's a bunch of them here, guys that have been funded, that whether you're funded now or not, you know the game. You understand what's going to take to make this work. So that's Kevin, that's Darren, that's Steve, there's 100 of you right here now. I'm just naming examples, okay? Amy, and so for each of you, the idea of going from that time of day approach to going to this approach was, get the context down, and then you can forget about that. You don't need to worry about that anymore the rest of the day. You can spend all of your energy in price action and setup thinking. So the idea is, if you are thinking about the price action properly, you should naturally flow that way, and you should end up thinking about the first hour high-low trade or the edge-to-edge trade, the AB trade. You should start thinking about that naturally at about 7:30 or about the first, that was the genius, in my description of this approach as a funnel is, the stuff at the top I don't need to do over and over again. So let's get it out of the way. Let's just do it and be done. And then let's spend the rest of the day down here. And because look, as long as I'm clued into the price action, I can't make any big mistakes. So I won't lose a lot of money, which is rule number one. Then rule number two, I've got a bunch of little places I can make money. And then I might just get lucky and catch a winner that rides the rest of the afternoon. The goal of every quote unquote intraday swing trader. And that is exactly why I say over and over again that unless every trade starts as a scalp, you will never become a skilled intraday swing trader, because you don't have the skills to get your entries right. And that's what's wrong with technical trading right there. You just can't get the entries right. So learn to scalp an entry, and you can grow to this level here where you can catch ginormous winners. And look, I don't talk about it much, but one of the things I do with the micros, I said this Friday, I have started using the micros instead of options. They're a better play. There's no premium. I can manage them in my same platforms. They appeal to the same thinking that I'm used to. So, if I think there's going to be a big flip setup, then put on the damn short or long micro for 2 or 1 and forget about it. I do it in an account I'm not even going to watch. I log in, I put the trade on, I throw in a catastrophic stop. I log out of that account, and I go back to my day-to-day scalping account, and I forget it. The trade will work or it won't, and hallelujah. That's the way that I suggest you integrate these things together moving forward. Remember, that's the if I were you, that's how you grow from, just having one thing you can do or one surfboard in your quiver to, having a lot of different games you can play at different times of the day. Or, Kevin, quite frankly, you could be my buddy, the surf guy. He just says, all right, I work from 6:30 to 7 o'clock every morning. Sorry, didn't mean to get rid of that. And he said, that's all he does. And the only thing he does is this. If he gets a trade there, he does it. And if he doesn't get a trade there, he doesn't do it. None of this, he couldn't care less about anything the rest of the day. He's on the beach or whatever, he's got a bunch of hobbies he does, but that's that. Make it work for you. Okay. Yeah, it's interesting. You gotta really work hard to understand the risk reward, Michael, about the micro instead of an option, but it's extremely viable if you think about it, because my risk, it cost me $50 to put up a micro, and even overnight, most brokers will do that margin for you. So I can have $1,000 in an account, put up a 50 and put a trade on during the night. And one example, I can't trade options at night. So I lose all the insight of that. So yes, there's a very, very good trading strategy there, but it has nothing to do with us here. It's just more of the things we have to offer in Trading Research Group. And at some point, yeah, you know what? I should, before I forget, I've been asked to do that and I just keep forgetting to do it. So while I'm answering your question, I'm just going to put that up as a live session request. Micros as options by Doc. Okay, so that is there now. Okay. Yeah, I don't use Greeks at all with respect to options, Michael. And I used to, I'm a really sophisticated options guy 30 years ago. I have no interest in it now. It's too much work. Trading futures is much more fun and much less work and much simpler, exactly. So, so the only time I do options now is when I think there's an extraordinary event I can take advantage of. So that example I used in one of the sessions about leaps and Apple, I made a year's salary for most people with $1,500 in a leaps option short or put position in Apple a couple of years ago. It was just one of those times that Apple got too frothy, in a really strong bull market. And sure, I don't own Apple, so I can't write against it, and I don't want to do any kind of fancy spreads. But boy, you buy a leap put that's way out of the money for 50 cents, and if there's any kind of a market correction, 15, 10%, which is what we got, that option, it went up to hundreds of dollars, so you can imagine but that's a lottery ticket. I just assume it's going to lose money. So that's how I use options. But I do, see the value in using an option as a micro as an overnight option, because, the risk is very manageable. And believe me, that's what the CME was thinking. A lot of the guys on the CME board, come from the old CBOT. Santelli's a good example. Okay, so, questions going once. I'm not quite at burning desires, but I think we're done with. What does wave volume refer to? How did that one slip by without anybody asking me to elaborate? That's a really good question. And I assumed everybody knew that. So I'll just show it to you really quickly. Wave volume is a concept developed by Wyckoff, Steve, but it's just the idea of, measuring the volume on a, zigzag. And wave volume that is higher on the up moves than the down moves is called springs, and other way is called upthrust. And there's a really good book about it in the book list channel called Trades About to Happen by David Weiss. Okay, let's see. I'm just scanning the questions for anything. Yes, execution is critical. So now you guys should understand what I meant when I started this session, this EPS session, that an edge is a useful thing out there, but unless you can put it into an execution in a setup, it's really useless. So a setup is the execution of an edge. And I got to just put somebody on the spot, either Michael Glass or James W. or any one of you guys that, this was really your first, Christine, Bob, do you understand that now? I know that made no sense 4 weeks ago. The colors have to do with whether it's a higher high, higher low. Again, Clay, I'm going to jump on you a bit because you've asked 3 questions so far in this session. The answers are in the Slack. They're posted. There's examples. I'm just going to say you got to do the work, buddy. I'm saying that with love, but seriously, we put everything out there so we don't have to answer that over and over again. It's in the Slack. Maybe Amy or David could point it out to you. If they're so inclined. So any Michael Glass or any James. So do you get that now? The ESP thing, the distinction between the edge and the setup, and how. No, hey Clay, I'm not picking on you personally at all. I'm giving you a way to be more efficient. Instead of just saying to me like, Jeff, what are the colors on your zigzag? Ask Amy privately, hey, where do I find, that kind of thing. I'm just saying I'm the wrong guy to raise that in a session where there's 50 people. That's what I'm telling you. You got to learn where the answers are and who to ask and the right forum. That's all. I'm not picking on you personally. I get look, so many people are having tough times right now personally. I'm one of them. I have ridiculous amounts of chronic pain. I couldn't even describe it to you. So I get it. I do get it. But I'm not telling you that to beat you up. I'm telling you that because that's how we need you to do it for this to work. Okay? Otherwise, we just get overwhelmed and it doesn't pay. I'll share this with you. Lee and I have had this conversation 100 times. Thank you, Wayne. I appreciate that feedback. Still waiting for Michael Glass, James W., Bob, any of the other new people to please give me some feedback on the distinction between edge setup and process, because at this point you should understand what an edge is, and how you can implement it in an actual setup. Super, Bob. Thank you. Thank you, James. Thank you. I appreciate it. That's really good feedback. So good. Thank you, Michael. Okay, good. Appreciate that. That's what we're looking for. So I want to just say one other thing too. And again, this is just an angle on what you said, Clay. Lee and I are constantly struggling between the idea of teaching something and trading it for real money. And every now and then I go back and I look at the opportunity cost of doing this. And it's significant. I got to tell you, for both of us, for anybody that's a trader that knows how to teach, teaching is much less lucrative. It just is. I can't emphasize that. But I'm not saying, poor Jeff or poor Lee. I'm saying that your job as TRG members, Clay, is to make our life easier by using the structure that we create for you. That's all I was saying. I wasn't beating you up personally. Okay, with that, questions going once. Lee, would you like to add anything to our session?
Just to your points to Clay, without singling him out, but it's the nature of the question that's important. If you go and look, you'll learn more, because you'll stumble across other things. You'll go down a path or a rabbit hole, and it is better to seek and search than just to ask. So for everyone, when something has been answered many times, don't be surprised if the answer is no or a pushback, because it's actually meant, it's meant well in two ways. It's meant well for us because we're bored of repeating the same thing. And it's meant well for you, because if you find it out for yourself with a pointer in the right direction, you're going to learn 10 times more than just being told it. It's about, buy a man a fillet of fish until he gets food poisoning, or whatever the saying is. You get the idea. We'll point you in the right direction. You've got to put the work in.
Oh, great way to put it. And you just said something really important, Clay. You feel so far behind. There's a guy who left our group who might be coming back. His name is Brent, who was in that same mode of I'm so far behind, I've got to catch up, and that became frustrating to the point where he's quit, and now he's gone back to just watching from the outside. You got to really give your mental health some room. You can't feel far behind, or trust me, you will never be able to do this. That's the wrong thinking. I get it.
There's no finish line.
Yeah, you're seeing the opportunity, and that's the FOMO. But you have to, and David, this applies to you too. You have to learn to moderate that, or you're going to constantly push yourself to information. In your case, David, that you're not ready for. And in your case, Clay, and again, I've seen this before as a coach, you're going to be constantly trying to get quick answers to things and scrambling around and confusing yourself, and then being, wait a minute, and it's going to not be comfortable. You got to give yourself time and just slow it down. And, that's the way it goes.
Wayne gave a great example in Slack earlier today, where he was talking about how he and his friends are in the gym and they couldn't get beyond benching 60 kilos. Yep. And then one of them did it, and then all progressed, on the way up to 90. We learn in a way where we retain our last point. You wouldn't expect to go into a gym weighing 8 stone. I mean, English imperial measures there.
They weigh themselves in rocks over there.
814s, 88 falls to 32.
So how many stone am I? If I'm 165 pounds, how many stone?
165 divided by 14. 11.7. So you're a bit heavier.
I'm 11.7 stone.
So if you wouldn't expect to weigh, come on brain, 140 pounds and go and bench 100 times 2 and go and bench 200 pounds. You'd work up to it. So, the way to assimilate this knowledge is no different to being in a gym, learning some other skill, learning a language. You don't get it all in a week or a month. You might work on a concept for a month or 2 months, and then suddenly it will click, or you'll be looking at something else, and that will trigger more understanding. This is incremental and organic, so there's no being so far behind. Let it wash over you, and your overall knowledge grows.
Perfect example. And following that exercise example, everybody who's ever lifted weights, which is probably everybody in this room, right? A lot of times getting to the next level in weights or in any exercise is a form issue. It's not a matter of you're not strong enough to push up, in my case, I bench press about 275, and to put, it's if I don't keep those elbow is perfectly level. I've got a rotator cuff injury and boom, it says hello and I drop it right on my chest. So, it's a technique thing too. And that's true in trading. And that's a perfect segue into the session Thursday, where we're not going to talk about any of these setups from a point of view of what they are. We're just going to look for examples of them live. And from the open all the way through the first hour, that's what I committed to do for that one. So we might be bored some of the time, but we'll at least get to see transitions, for example, from ebb and flow to H momentum. In the open, there's hundreds of them. So that will be a really good opportunity. So you all want to be here for the session Thursday. And it's going to be much more valuable live than anything in a recording, although the recording will be good too. And the other thing is, do not show up at this session not understanding this hierarchy here, because not only will I likely not answer a question that's about something on here unless it's a really intelligent one. I'm not just going to review something I said already, but I will probably shoot it down. I'm not asking you not to ask questions, but don't come in here and say, what's the stop on an open 5A if I bring that up on Thursday, because that tells me that you weren't paying attention or that you're not here. And I'm going to start tossing people out when they do that, because it's just distracting to the people that are paying attention. So please try to, at least have reviewed this before we go, and then you'll all get a lot more out of it. Okay. Anything else? Thank you for all the kind comments, everybody. I appreciate that. And Lee does as well, I know. And we're going to wrap it up right here. So Burning Desires going once. Thank you. Enjoy the weekend. And we'll see you at the Ides of Monday, and potentially at an open session tomorrow at the reopen. I doubt it at this point, but I might do it. All right, Lee, cheers.
Cheers. Bye.
Bye.